All right, we're live.
Oh, we're live.
Excellent, excellent. Hey, welcome back. This is the Gregory and Paul Show. Gregory,
Hey everyone, Paul.
and we break down the latest SaaS startups, AI, whatever the internet is debating. We aim for smart takes. I have a lot of dumb ones, and you let me know, and that's fine. That's how the internet goes.
It is.
And
Yes.
we stream live on X and LinkedIn every Friday at noon. And then, Paul, do we put this on even
Yes.
Spotify, or
Yes, we
what's the
do.
deal?
We put it onto YouTube, Spotify, Apple Podcast, everywhere.
Oh, we're on Apple Podcast too,
We're on all the podcasting platforms.
dude. There you go.
We're professionals.
Semi-professional. Okay. And then we had our special guest, Arjun Dev Arora, who I have known for many years. He was actually our first guest for our first episode, where none of us knew what we were doing. The audience didn't
That's
know
right.
what to expect. And now that we're a giant success, we asked him to come back and experience the all new Gregory and Paul Show. And so, Arjun, do you want me to do like a little quick intro?
Sure. Thank you. Yeah, great to be here and excited to be back. So thanks, y'all. Congrats on your success. This is going to be fun.
So
yeah.
the story I love to tell is that I met Arjun at this startup that I worked at very briefly, and I'm very very proud to claim it was an abysmal failure. but that one of the huge successes that came out of that was our relationship, and it's been great knowing you ever since. And we'll go into your background a little bit, but I knew you when you had your own startup, which I want to hear about. And then you kind of pivoted and now work in
Yep.
the startup fundraising space, both on the like founder startup side and helping emerging managers and other investors raise money for their funds.
Yep.
So yeah, let's start with like, I want to hear about the beginning. Like, I didn't know you before your first startup, Retargeter. So
Yep.
I'd love to hear like how you got started with that, how you got into entrepreneurship. And obviously, like, we have a lot of founders and entrepreneurs who listen to this. And so these origin stories, I think, are always really helpful for them to get inspired and understand how to overcome some of the challenges that they have at the early stage.
Yeah, for sure. Well, since you asked, I'll start from the beginning. So I
Yeah.
went to school at UC Berkeley, so studied electrical engineering and computer science, so technical by background. But while I was there, I started to take some, business classes. So I was at the Haas School of Business, was doing something called the Center for Entrepreneurship and Technology, just getting plugged into the entrepreneurial world. At that time, that program had literally just started at Berkeley. So it was I think, the inaugural class of CET. Fun fact, in that class at the Center for Entrepreneurship and Technology was Tony, the now CEO of DoorDash, Ryan, who was the deputy CTO of the United States of America, the co-founder of Superhuman, and a couple other interesting folks. So I was very, very fortunate and lucky to kind of just be hanging around some incredible people at Cal. And none of us really knew what entrepreneurship was about. Berkeley at the time wasn't necessarily, the biggest entrepreneurial school, though certainly it had many successes. So it was just a fun place to be, at the right time. But anyway, with from there, a couple of years of investment banking, and then a couple of years at Yahoo. And so at Yahoo, I ended up leading business development for Yahoo Real Estate. Started, as a relatively junior inbound business development guy, but it was an opportunity where I got to cut my teeth at a bigger company and understand just how the internet worked, and got to really get in the weeds on, these are the first principles of the internet. What is it? What is advertising? What are links? How do you send traffic to certain places? How do you do data partnerships? How do you get data from one party to another? How do you do co-marketing, co-branding? So it was a really great place to just learn the literal basics of the internet. And by the way, many of those first principles still apply today, even in the crazy world of the internet and AI and GPTs. It's still the same principles. It's text, it's links, it's images. So, the foundational, until we all disappear into VR world, it's still the same first principles. And that was super helpful to learn. But anyways, from there is where I started my first company called Retargeter in the online advertising space. And obviously it had some exposure to display advertising at Yahoo. At the time, we were doing a boatload of it. That was the way we monetized. And it's some early kind of retargeting technology, but it was limited in scope just to what was happening inside the kind of Yahoo walled garden, so to speak. And so the idea of the premise was, hey, let's actually make, retargeting accessible, one, to more people. The only folks who could usually buy any display at that time on Yahoo were spending, tens of thousands, if not hundreds of thousands or millions of dollars. And so it was, it wasn't very democratized. And then two, it was kind of within the walled garden of Yahoo. So that was the genesis of it. And, just jumped off the proverbial cliff and got going. Yeah.
Awesome. Did you raise any money, or how did you get started?
Not initially. Initially, it was it was a small, just kind of getting it out and getting going, and very bootstrappy. So bootstrapped for the first, I think 4.5 maybe of the 6 years of the company was all bootstrapped, and so that just meant initially started to stitch together a open source ad platform called OpenX that allowed us to start connecting different sources of display advertising, and then had the ability to use a pixel to be able to do some very basic retargeting, and that was literally hacked together. These days you would call that vibe coding, but those days it was just hacking stuff together, and then just started selling because we said, hey, this actually works. It works enough to be able to go to a small business and sell this. Yes, it was very manual at the time. We had to do some work on the back end to get any campaign live, and work with a partner and do all kinds of things. But we were able to kind of get campaigns going. And the benefit of the ad world is that once you start, you could charge real money and you could make real margin. And so you're off into the races. And then we started to build what I would consider to be real technology a little bit later. But for the first year, maybe even year and a half, it was very hacked together, and then that allowed us to at least get going and make, at that time, quite a bit of money in the early days. I think we got to something like, $50K in MRR, just hacking it together, and then started to use that cash to hire and then get going.
Awesome.
Yeah.
Okay, so that's the kind of entrepreneurial journey, and then what was the eventual outcome? When did you leave Retargeter?
Yeah, so we ended up selling the company in 2015. The company got to tens of millions in revenue. We built an early, not so good version of the product, and then using an outsourced kind of service provider. Then we kind of built it internally with our own talent, and then built it again internally. But anyway, we were in a great place. We had customers all over the world. We worked with some of the largest ad agencies. We were selling to folks like Uber and Twilio in the Bay Area. And then we sold the company in 2015. We were just about 50 people at the time. It was an outcome. That was 2015. And then from there, made my way over. I had been an LP in Fund 1 of 500 startups, and I had been exposed to just a lot of early stage startups, and obviously became friends with a lot of other founders, and was just generally trying to be helpful to other founders as they were going through their journeys. Particularly once we had hit several million in ARR, a lot of folks started to reach out and just, hey, how'd you do it? How'd that happen? What worked? And so started to be in the mix with other founders and supporting them, and that's where I just kind of really enjoyed that, and really enjoyed working with other founders and helping them out. That then kind of organically led to me jumping into 500 startups. So I was an LP in Fund 1. That kind of got exposure early, and then just kind of was around the hoop with other founders and investors from that fund. And so they said, hey, why don't you just come in and hang out as an EIR initially? I didn't know what I was going to do. I didn't know if I was going to go start another company or do whatever. But I just really enjoyed it. I loved, working with young, ambitious founders, going through the program, and pretty quickly found myself as a partner at the fund. And then pretty quickly thereafter found myself leading fundraising and investor relations for the fund. So it was a quick run, and then ended up, being very materially involved in all things from, capital formation to actively investing to supporting the portfolio to, teaching, venture courses at Stanford that we were putting together. There's all kinds of fun stuff. So it got fun fast.
Awesome.
What kind of founder traits do you look for? What are some kind of the signs that you look for, or habits maybe?
Yeah, I think that one interesting piece of news that came out recently, and maybe it's a bit timely. So Hummingbird VC, who I have a lot of respect for, I think they put out something that said, we look for founders with childhood trauma, right? And I think that was,
I saw
attention.
that.
You saw that, right? So it was an attention-grabbing headline. But I think the implication of that is what's more important. I think it's looking for folks who have an insatiable, drive. And it doesn't necessarily have to come from childhood trauma. It can come from other places, but just to make the point, folks who have an absolute relentless need to solve a problem and to dig in and do something for whatever that reason might be. That is, I think, a really important, critical base case for just investing in that founder. And then everything on top of that is obviously a very sharp understanding of the market, a deep customer obsession, an ability to be nimble and be highly creative and find solutions with constrained resources. And then, be technical enough to build a great product. And not to say that AI is now making it, easy, but it's making it much easier. So where I think we're now dependent even more so than before is just making sure that you have that customer empathy, you can do that customer development and really understand the problem and the market, and then be just relentless in executing against it. So those are things that I really look for. And then a design ethos. I'm highly partial to design. I know, Gregory, behind you got that great design magazine. I think it does matter. And so I think, finding folks who can think about the experience for their customers, their partners, their employees. And that's what design means to me, is just being a thoughtfulness around the experience for the end user, whoever that quote unquote user might be, whether it's an investor or somebody else.
Yeah, I could drown this podcast in discussion about design, but we'll do that another time.
Yeah.
Another time. Okay, so great. That's the Retargeter experience, and then I'd love to hear more about 500 startups.
Mm-hmm.
Like, I remember us chatting a bunch of times while you were there. I even went to a few of the demo days. Of course, ran into Dave.
Mm-hmm.
So maybe just let people know a little bit about Dave too. I don't know if people who listen to this are so, because we use these people's names like they are people that we just know, right?
Yeah,
but I think for other people, a little more context would be helpful.
Yeah. So Dave and Christine started 500 Startups in the early days, and I think this was in the early 2010s. And at that time, this kind of concept of seed investing wasn't really
just one second. Dave was like PayPal Mafia, right?
PayPal Mafia. So Dave had been around, through kind of the PayPal ecosystem, and had worked there for a short period of time, and then had started a small sub fund that was working on Facebook apps and other things. So he was kind of floating around that broader, PayPal, Facebook ecosystem in the early days. And then at one point had a small sub fund. I think was initially maybe connected to Founders Fund in some capacity, but anyways, that, which would make sense given the PayPal connectivity. But then decided to start 500 Startups with Christine. And the principle at the time was, there's this burgeoning kind of asset class of seed investing. And around the same time, Jeff Clavier at now Uncorked, called Soft Tech at the time. There was Mike Maples, now, was always been at Floodgate, and other folks. So they were kind of the early vanguard of this principle of seed investing. And at the time, the idea was, hey, the cost of starting a company is coming down materially. It's not going to cost $5 million and a whole bunch of servers and things. You can do it. Now, the web-based stuff was just coming into fruition. Not too dissimilar from what's happening right now in the AI world, though I don't think we've seen the venture capital ecosystem adapt to it in the same way that it did in the past in the creation of these seed funds. But anyway, 500 was one of those funds. And the idea was just to be a very active early stage investor and write small checks into lots of deals. And so the portfolio math, supports that. And so if you look, and many folks have run Monte Carlo simulations and done all kinds of things around this, but the idea is basically, if you write a lot of little checks, and venture being a power law game, you're going to catch a couple big winners. And that was the idea of 500 Startups.
Yeah. So Dave McClure was his name. Mm-hmm. And just in case people are wondering. And I looked pretty closely at 500 Startups. I was always a fan.
Yep.
I was a fan of you too, of course.
Oh, thank
but
you.
a fan of what they were doing at 500 Startups. And so what I do know, so now we have the data to go back. And so this idea make all these small investments and all these little early stage seed companies, does this work? And so I know if there's...
I can tell you, as an LP fund one, I can confirm. Yeah.
Were there 3 unicorns? So Canva was one. I know Canva was one of them, but there's two or three other like well-known SaaS companies today that were part of the original cohort.
Twilio is another big one there. So yeah, I mean there were many big winners, and by the way, even through Fund 4, there were many now companies that we invested in. So that was Fund 1 where I was an LP, but in Fund 4 is where I joined as a partner. We had a ton of companies that we invested in at the earliest stages through the accelerator program that are now unicorns. And yeah, that strategy and structure definitely worked. There's LPs at Vertus Capital who've done a lot of math on this, and then of course we ran a whole bunch of interesting Monte Carlo simulations and otherwise at on our side at 500 when I was there. And absolutely, I mean the math has worked. Fund 1 is a stellar fund. I don't know if I can share the numbers publicly, but it's very good. Yeah.
Yeah, I saw or heard Dave recently on 500 startups, and he was talking about that too. That like the approach that he used and the data. If you essentially, it came down to like if you make enough investments and you have a certain quality bar and a certain approach.
Yes.
Like his data at least shows like it could be enormous, right? Like just massive. Okay, so that was the 500 startup days, and you did that until about when?
Until I think it was around 2018, roughly.
And then, and so what have you been doing since?
Yeah, since then I ended up hanging my hat at Expa for a short while. So a dear friend of mine was a partner there, and it was a good place for me to kind of hang in between things. So I was in residence there, and Expa is the I would call it the venture studio meets venture fund, and also do some philanthropic work of Garrett Camp, the founder of Uber. So Garrett was the original founder of Uber, and he brought on initially Ryan and then Travis, who most folks know as the CEO of Uber. But Garrett was the founder, and so that was a great place to hang. And obviously, Uber had done incredibly well by that point in time, and actually continues to do well since they even left Expo a few years ago. But yeah, it was a great place to work on a handful of special projects, and again, a place with a deep design centricity and a ton of great portfolio companies. So I got to be involved with companies like Aero, which is a really cool company in the private aviation space. So if you ever want to take a semi-private plane out of Los Angeles to Mexico or Aspen, they're your folks. It's a beautiful experience, well designed. But also, of course, a whole bunch of other projects like Metabase and House and things in more traditional kind of consumer internet, obviously given the Uber history, but also things in kind of enterprise and infra that we were working on at Expo as well. So it was a lot of fun.
And then today you're just independent consultant. Yeah.
Yes. Yeah. So today, that was a place where I was hanging out for a bit and got involved with some nonprofit work as well. Became the chairman of the board of the St. Francis Foundation. But I started doing what I'm doing today, which is mostly advising founders and fund managers, and then doing some, work with LPs as well, and from time to time investing both personally and through SPVs. So it's a good combination of activities, but I'd say I spend my time with about a dozen founders that I'm very fortunate to get to dig in with on a very material basis, about half a dozen funds, and then, get to do some investing from time to time. And then, depending on the situation, we'll pull together some SPVs or bring a few family offices I work very closely with into some late stage deals. So that's kind of the mix of things that's keeping me busy these days.
What are you excited about? Maybe in 2026, what kind of startups are you looking to fund?
Yeah.
Or
yeah, definitely. I would say there's obviously we're all excited about AI. I think just as a general starting point, but I'd say space, deep tech. I think those kind of spaces are particularly interesting outside of the traditional kind of vertical AI solutions that we're seeing everywhere. And then, on the fund side, I think there's a lot of great fund platforms that have gone through a very, very difficult last 5 years, but I think they're going to come out stronger. And as the liquidity returns, we're going to see some great early stage funds that are just going to be great supporters to founders, right? There's this new tranche of kind of pre-seed and seed stage funds that are very hands-on. They are, there to support founders. They're comfortable investing in unique and different and sometimes weird things, which I think is great. And we need more of that. And so I think that next wave of fund managers, I'm super jazzed about as well. But on the vertical AI side, I love people who are going to tackle, very difficult industries that have typically been run on paper and pen, and using huge teams of people that are doing, difficult or manual work. Those spaces, particularly excited about. Think shipping, logistics, trucking, aviation, chemical manufacturing, mining. All of these spaces we're just seeing a ton of innovation coming in around AI, hospitality. Those spaces are really, really exciting to me because I think you can actually use technology in a way to, particularly with AI, solve real problems and remove a lot of the, for lack of a better term, just BS work that a lot of folks have to do. So that can kind of allow you to be just elevated in doing more human work. And so that's what I'm excited about.
Hey, I am fantastic at BS work, okay?
Just because you're good at it doesn't mean you should keep doing it.
Touche. So, hey, I want to share this thing quickly that was in our doc. Because, when you mentioned, space tech, and for a while, I kept thinking that, space tech was just this kind of, vanity play by billionaires or whatever. Yeah. And then, Bernie made his statement about wanting a moratorium on data centers. Yeah. And of course, I laughed at it and made fun of this on X, just like a lot of other people. And I do not agree that we should have a moratorium on data centers. Let's be super clear. Very comfortable with that being out there as my statement. Yes. But Elon's response was, I saw later, blew me away, where he said, well, I'm just going to build my data center in space. Yeah, right. And you don't have any jurisdiction over it. Yeah. I was like, wow. It was the first moment where I looked at, the space tech stuff, and I was like, okay, it's that has legs. That's a very real reason to go do it, is the restrictions are very, very different. And let's even say I don't want this to come off as so rogue. Let's agree that the U.S. government agrees to the launch. You don't need municipal support to build. You're right, because the pushback was, the Bernie thing aside, the pushback has been municipalities are we're mad you're going to take all our water. We're mad our energy prices are going up. We don't trust you. Our energy prices are going to go up. And I'm a huge advocate of tech, but I think that those are reasonable fears of local people. Sure. You're small. You're in a Wisconsin rural town. You're a farmer. That's your livelihood, what you know. And this big giant corporation that's literally bigger than many nation states is going to come to your town and start doing things I can see why it's really concerning. And they maybe don't trust it, right? So this very interesting alternative is well, I'll just boost this thing up in outer space where I get 24/7 access to solar power. I don't need to worry about cooling. And then I believe I have the technology with microwaves over to beam this stuff down. I was really blown away that this will be, I think, a reality in my life.
Yeah, no, it's already begun. And I think a lot of the the rocket infrastructure for that is certainly in place, SpaceX, Firefly, and others. And then, the other kind of manufacturing in space. I was just on the phone before this with a company that's doing space debris removal. So, you set stuff up, you got to build stuff, and then when stuff breaks, you got to bring it back down. So I think all those parts and pieces are and then you got to communicate, right? So satellite, all the comms related stuff. But all of those parts and pieces are, there are great people working on it right now, and it's functional, and it's in space. Removing debris today, for example. So I think that's where it's happening very, very quickly. Not only in your lifetime, but probably in the next 3 years, right? So these sort of things are moving with tremendous speed, and it's going to be fun to watch.
Yeah, cool. 3 years, launch that data center. I'm all excited.
Yeah. That's not a prediction. That's a prediction, and I have no data, but it feels like things are moving quickly. So
it's on video. We're going to hold you to it.
Yeah, there you go. That's good. Right.
So
we'll check in in 29.
I always get back to Paul's question too, and I know I took that on a tangent, so it was fun, but fundraising.
Yes. Yeah.
I think this is really important because and I want to make sure that we got your perspective specifically on startup fundraising, early stage fundraising. I mean, you and I partner on the events, the ViberSaaS events in San Francisco. We have seed stage, early stage, it may be Series A people, and they're all looking for money right now. So help us just understand perhaps where you see the landscape in terms of fundraising for early stage companies today. Yeah. And how you think your best guess about how it'll play out next year.
Yeah. So it's a bit of a tale of two cities. I think if you're a super high signal founder working on an AI, problem that has the potential to break out, it can appear like people are throwing, money at you. And that is true in some. As I know, many founders who have gotten, $4 million, $5 million just day one, right? Nothing but a deck. And they may be second, third time founders. They may have some meaningful pedigree, but they're working on a big AI solution and they're off into the races. And then, for other folks, there is this kind of, I don't want to call it a zombie universe, but there are a lot of companies that have raised either seed rounds or Series A rounds pre kind of the major AI boom and are either now pivoting into AI or, trying to add AI in a way that makes them credible. And for those folks, fundraising has been incredibly difficult, right? And they've had a very, very hard time, raising capital because they've had to both pivot and show that they can be AI native, and, do so in an environment in which all the money is being thrown at things that have the potential to break out like Cursor or break out like Anthropic or whatever it might be from a revenue growth perspective. So that's where I think we're at, from a market. If you're a net new company that's AI native with a very strong pedigree, and, you're listening to the TechCrunch, bubble, it just feels like, yeah, of course, I'm raising millions of dollars right out the gate, and that's just normal. It's totally easy to do, and everyone should be doing that. And that's true for a very small subsegment of the world. And I think for everyone else, you have to run a very tight process. You have to think thoughtfully about, the market, how it's changing, how you are integrating AI, what will give you the potential to grow with speed, and how you're thinking about marketing and selling in a noisy environment. And you need to come with very sharp answers to all of those things. And then, it'll be protracted. It'll take longer than it certainly did a few years ago. And you may raise a little less than you wanted to, but you could still get a round done. And then for some folks who are, just not able to get the growth going and they kind of raised their A or B back in 21, 22, it's going to be tough. I think we're going to see a lot of companies that are yet to go through an acqui-hire process or frankly just have to shut down. Somehow we still didn't see as much of that in 25 as I thought we might have, but it's definitely coming even more so in 26.
I have a follow-up question. Do you think the fundamental way that founders raise capital has changed recently? Or will change in 2026?
No, I think just AI is now giving you the opportunity to build your lists better, refine your messaging better, figure out, do your meeting research better. So, there's no excuse for not building out a very robust list. If you're raising a seed round or a pre-seed round, you've got to reach out to at least 100 people, probably closer to 200 if I'm being frank. How do you build that list? Make sure you do your research, you're thoughtful. If you're a fintech company, you're not reaching out to, consumer AI, investor or something like that, or, vice versa. So just making sure that you show up much, much more educated than in the past. In the past, people might forgive it. Missed it. Yeah, we actually don't invest in that. But if it's on your website and it's obvious and AI can go scrape it and fill in the thing that says this is what they invest in, this is their check size, there's kind of no excuse for missing an obvious thing where there's not a match for a fund. So I think, being much more prepared, building out your list more robustly, finding more funds, so that when you do run your process, you are being very comprehensive. That is definitely now AI has enabled a lot of that.
Okay. This is kind of fun. Let me throw at you a few questions I don't know if it's debunking rumors, but maybe these are popular things you read on X about fundraising. Yeah. And let's go down this. Yeah, this will be fun, right?
Yeah, let's do it.
So there's always a debate about the deck.
Yes.
The fundraising deck. Some people are it's super valuable, spend tons of money on it, make it look cool. You need all these projections. I met a guy yesterday who's like does the financial projections for like early stage startups, like and puts them in the deck. So like there's a whole almost ecosystem of people around who like think that. There's a whole nother cohort that's like the deck is just like a leave behind. It's more about the founder. It's more about your confidence. It's more about, particularly in the early stage where you don't have a lot of traction. And I would go as far to say like, I guess to some degree I'm on this camp. Like the projections you're going to show me with like an early stage, seed stage company are just meaningless.
Yeah.
Like I don't care that you've got some a PhD in math who created a financial projection for you. It's just not useful. So where do you fit on that spectrum, or what do you think about that?
Yeah, I'm partial to a deck, and I think it is helpful. I think the projections don't necessarily. They're only important as a way to unpack your thinking and unpack your level of aspiration and aggression. That's where I think the projections matter more. It's more about, okay, are you thinking about how the revenue stacks up, how it grows over time, where you might introduce net new products or net new geographies or things like that. That's just helpful to unpack someone's thinking. I don't know that, nobody believes those numbers ever. And it's funny is that even in the place, folks that have been aggressive, when it's really worked, it's grown even faster than they could have ever imagined. And when it doesn't work, it's been, just zero. So it doesn't matter. Right. So I think that's the reality there. And then on the deck, I think unless you're a very seasoned, second, third time founder, and the folks that you're going to be raising money from, and you've dealt with them before, you may have even raised with them before, then maybe you can get away with not having a deck. But for everyone else, bring a deck. And I know a very extremely tier one, GP founder of a multi-billion-dollar multi-stage fund who just will not take a meeting if they don't send him a deck. He's like, look, I don't care. Something else will show up. It doesn't bother me. Like, if you don't send me a deck, I'm not taking a meeting, right? And I wouldn't say I was that harsh when I was at 500 startups. So I was pretty close, So I definitely want to see the deck, and because it just lets everyone be more prepared. It lets you show up and actually have a dialogue and a conversation, and not necessarily sit there and be pitched, the deck. So it's not that you're building the deck so that you can come into a 30-minute meeting and pitch it for 9 minutes. It's actually so that there's enough context ahead of that meeting so that you can get into a discussion. Yeah, you might pull up a slide here and there, as you're having your initial conversation, which can be helpful. But it's much more about providing a material amount of context ahead of the first conversation so that you can dive right into a fulsome discussion that lets the investor know, hey, is this real? Is this something I'm actually excited about? Do I want to spend the energy and cycles to take this to the next step? That's then becomes a question.
Okay, this is fun. I'm going to turn this into everything I want to ask about the fundraising process. Yeah,
let's do it.
But we're afraid. But we're afraid to ask you, but post it on Twitter anonymously.
Yeah, there you go.
Yeah. So okay. So like the other thing this is fun, right? I'm too busy to read Twitter right now to get some more good feedback. But what about the like 3-slide teaser and then the 10 or 20 slide deck? What is your perspective on that? So just context.
Yeah.
There's a whole cohort of people who are like, you send the investor a 3-slide teaser and then say, if you want more, I have my full deck that's 10 to 20 slides.
Yeah.
Where do you fall on that camp?
I fall in the just do one 10 to 15, slide deck that is tight and well structured so that we can just get to the meat of the matter. If I'm going to pass, I'm going to pass anyways. Like I'm going to pass on a 3-slide deck or a 15-slide deck. Like give yourself the opportunity to tell the full story and have someone at least have the opportunity to try and understand it, and then go from there. And that again is in the spirit of having a full conversation. And again, if it's compelling enough in terms of the market, the product, and there's questions open, that's fine. Like that's what the discussion's for. That's the thing to unpack. But if there's not enough substance there, then it's just very, very tough. Yeah.
Great. I got so many of these. Yeah, this is really fun. So what about cold outreach versus warm intro, right? So the other thing you'll read on X all the time is like, there's a whole cohort of people who are like, do the crazy DM strategy, just cold outreach, go nuts. And you hear these stories too, which I know are true. I just sent an email to Patrick Carlson at Stripe, and lo and behold, he invested, right?
Right.
And then there's I guess let me, I think to be super clear, I would say Mark Andreessen, I think, is the king of the warm intro
Yep.
perspective. He's
Yep.
always very clear in every interview. He's very consistent, which I like about that guy.
Yep.
He's like, if you can't figure out how to get to
Mhm.
me, then you don't matter. It's basically
Yep.
what he says, right?
Yeah.
That's part of the skill set.
That's nice.
Yes. Yeah.
Right.
Yeah, and I like the way he's so upfront about it. He's like, that's
Yeah.
part of the skills. Like, so what do you think about this?
I am very, very strongly in the Mark Andreessen camp. Yeah, so I think the warm intro matters, and I think it's a part of being able to, unlock the network. And in any entrepreneurial activity, you're going to have to build and maintain relationships, and you're going to have to figure out how to get a whole bunch of people to be mildly interested in supporting you just a little bit. And if you can do that, then, things move and the world moves in your, in favor. And that creates that reality distortion field, right? So I am very partial. Now, if for some reason you just can't get that warm intro and you take the time to write an incredibly thoughtful cold email, great. Like, that's fine too, right? So I think that if you've tried every angle and you just don't feel like you have the warmest angle in the time that you need to get things moving, I understand that sometimes you just got to send that note. But if you do send that note, it needs to be so well researched, so well thought out that it would make a professional spy blush, like the level of excellence of understanding that other person's life. Like, it needs to be at that level of a commitment to understanding the other person. That's the only time you should send that cold email. It's got to be so good, so well researched, so clear on what that other person's motivations, interests, drivers are. Okay, cool. Now, if you need to, sure, send the cold email. I get it. Sometimes you got to do the thing now, and okay, if I could go build a relationship with that person, they can introduce me, but I don't have 3 months to do that. I got to do it now. Okay, fine. Send the cold email, but make sure you do the research.
Can you elaborate on that a little bit? Now that with AI, it's so easy to, watch the video, get AI to watch this video, extract a call from you, send that in an email.
Yep.
Can you tell right away? Is that useful?
Right. I think it has to be something that, is a bit more personal, and it feels like it isn't easily AI-able, right? So it's like, hey, I understand that I've watched or XYZ, or I've read about this and that, or I noticed these are your last 5 investments. You clearly have a passion for, X type of founder who comes from this background, or, and I match that background, or I noticed that you've invested 3 times into this industry. Here's what I think you've learned, or what I could teach you, or whatever. I mean, I think, using any and all of those ways to do it. Yeah. And I think AI can definitely help. And even if you do it with AI, great. Like, at least you've put in the effort. Most people won't even do that, right? So to receive the cold email with someone who's clearly spent time with AI to try and figure out how to send you a great note, cool, that's great. Like, it doesn't necessarily need to be literal manual research. So yeah, I think it's about showing effort, and I think it's about showing an understanding of the other person, like just a willingness to step out of your own mental space and onto someone else's map. That alone is usually a big enough signal for a lot of folks. By the way, this works well for warm too. Not to say this should only be done for cold, right? Even if you're sending a warm intro, if you can add a little bit more personalization, it goes a long way. Yeah.
Awesome. This is so much fun. Let me just keep going with the questions.
Yeah.
How much traction does someone need to get funded, let's say, in 2026?
Yeah.
And because I meet people all the time who I meet 2 groups of people. They don't have any traction. They kind of have an idea, maybe the prototype. And I think those are always been hard to get funded, even in a good environment. So,
but especially now. I
already have an opinion on that one.
Right. That
so
one's
the question
easier.
is how much, because then I meet people, they have traction, but how much traction, how would you explain that? Okay.
Right. Yeah, so I think on the pre-seed side, well, one, I think, in this day and age of AI and vibe coding tools and, Lovable and all the good things that and Replit and else, you should be able to at least put something together, right? Even if it's some feature of one part of your product that solves a material problem, just being able to put that in place, just to show your product thinking, your customer centricity, your design ethos, all of that stuff, you could do something. So if you don't show up with even that, then you've got a problem. But let's say, you at least solve that. And now you go out and talk to a whole bunch of customers. So maybe you've just done a ton of great customer development. and you're raising a true like pre-seed round, right? If you're raising a true pre-seed round, then it's fine. Then I think as long as you've kind of built something, you have a nice website, you have some early version of the product, you've talked to probably at least 100 customers, maybe 50 to 100, and if you're in consumer, you probably had it in front of thousands. That's what's necessary to at least get the pre-seed conversation started, and that means that's an institutional pre-seed. That's our friends at Precursor Ventures, Afore, Pair. These are your classic kind of pre-seed investors. They invest very, very early, and they're going to need to see something, like this to be able to make a bet. And then if you're looking for a seed round, well, then you better have revenue, and you better have a kind of a meaningful amount of paying customers. You need to have tested pricing, maybe with a handful of them, seen how it works, and now you've got to be headed in a direction in which it's clear that there are people paying for your product, you're solving their problem, the NPS score is at least high and trending up even higher. Those sort of things then matter a lot. But for the pre-seed, if you could just at least get that functional part together, then you can run a kind of institutional grade pre-seed process, knowing that you might raise somewhere between $500,000 to $1.25 million, or maybe even up to $2 million for an early stage company. But again, the onus is the bar has gone up. The onus has gone higher on the founder to go figure this out more so than ever before.
Okay, that was good. Paul, do you have any other questions?
Nope.
I think I got one more to close out this segment.
Mm-hmm. Yeah.
Okay.
This is great. Okay.
This is another perennial Twitter debate. LLC or
C Corp
or S Corp.
C Corp.
Oh yeah.
Yeah, I know where you're going with it. I think if you're building a serious,
you beat me to the punch on that one.
No,
okay.
Sorry, I know where this one's going. If you're building a long-term, serious startup, and your intent is to raise institutional capital, it's got to be a Delaware C Corp. You just make your life easier, make everyone's life easier, and just do it. If you're building a services business, anything else, in and around the startup ecosystem that serves startups, or, you're doing something that is a more small business, by all means, LLC is the better structure from a taxation perspective, and, a whole bunch of other things. Not financial or tax advice, talk to your people. But, the point is, I think if you're doing one thing I will say is if you're doing a venture-backed startup, that one is a Delaware C Corp, for sure. Yeah.
All right, you heard it here.
Yeah.
Confirmed.
Yes.
All those LLC people out there. Oh my god.
No choice.
Yeah.
Paul, should we jump into some news items? We
Let's
got a
do
ton
it.
of stuff. A ton of stuff on our doc.
We dove into a little bit of it with the Bernie news.
I had to share that.
Our first one. What's on the docket for Lovable? They're
You want to get it?
Yeah.
So I'll kick this off.
Here. Sure.
It came out like last night or so. Maybe it was the news in Europe or something. So Lovable, another vibe coding tool out there, and I would say that they're positioned perhaps as the one that's non-professional. Like Cursor, in my opinion, is the professional tool. Engineers, people with like an engineering background are using this one. They're going after the market. They even mentioned in the communications about this, like healthcare workers and just all kinds of other people vibe coding stuff. But they raised $330 million at a $6.6 billion valuation. Arjun, what is your perspective on this and this kind of vibe coding market in general?
No, it makes sense. Full disclosure, I'm a small investor in Replit and a big fan there. And I think Lovable has really figured out that they have such a amazing community of kind of raving fans. There's a founder that I was an advisor to. She unfortunately had to shut down her company, but she just became obsessed with Lovable and really figured out how to build so many incredible things so quickly with the platform, and the extensibility of it and what's possible. And, everything from her holiday card to, a mini CRM for their family. And like all these little things were able to kind of spin up with such speed, is really, really impressive to watch. And so there's a universe of raving fans who are using it for all kinds of use cases, both personal, semi-personal, business, SMB oriented. And there's anytime you can build that level of kind of raving fans, it's clearly you're onto something. And so Menlo Ventures, is now really leaned in. They're big investors in Anthropic. They're coming in heavy here. Creandum, the company's out of the Nordics, and so it was good to see the Creandum folks in there as well. So it's become a big win for the Nordic region as well. And there's a lot of European users of the platform, and they're very thoughtful about design. They're thoughtful about security and privacy. So they've really checked the box on a lot of those things as well, particularly given GDPR and some of the other things. So I think, yeah, I'm excited. I think anytime you can unleash people's creativity and allow them to build and create, that's awesome. I think the long-term sustainability of that is always up for question, because who's going to pay and for how long, and are they going to find solutions that they either then build and host with Lovable and then they just keep live? Great. If that happens and they continue to use them even a little bit, then I think the stickiness remains and it's no problem. I think if it becomes a place where people jump into other platforms very easily, or it's just a novelty thing, and once they're done, they don't really keep or use those apps and cancel their accounts, that can be problematic. But so far, all the data looks really impressive, and it looks like people are doing the opposite of that, which is building things, keeping them on the platform, having folks use those, using Lovable to power everything end to end for the execution of those projects. So all of that, looks positive.
Do you think there's any downstream effects? So I know that they connect to Supabase,
Mm-hmm.
right? So
Yeah.
I can almost say that every single Lovable user has some exposure to Supabase, so they're getting that lift. Do you think that there's a opportunity for other companies to join?
Oh, I'm sure. Yeah, I'd love to look at their stack. I haven't had a chance to do that, but I'm and kind of who their key partners are. But yeah, if they truly make this an ecosystem and a platform, then anybody powering them at the infra level, and then anybody they end up partnering with. I mean, one could imagine a really powerful partnership with Stripe. I don't know if they already have it in place or not, but just
sure.
getting things going there could be really, really interesting. So I think if they do build that platform out in a material way, they're going to help power a lot of other folks, which will be cool to watch. And that's like I think of Salesforce, or I think of pick your favorite true platform company and the entire ecosystem that develops around it. I mean, I know they already have a big conference, but I can imagine their version of Dreamforce would get even crazier in due course. Yeah.
What do you think about Lovable? You're our resident vibe coding expert, guru, ninja. I was told not to use Rockstar anymore, but I'll throw it out there.
Well, the developer community is healthily skeptical, but I think, I think we're just we're a little bit scared for launches. That's what we actually think. But like to your point, Replit is amazing. I've used it. I use Cursor. I haven't written a line of code in the past 6 months. This is full honest truth.
Wow.
And yeah, it's built my entire platform. I think vibe coding is here to stay, especially with the new Anthropic models just keep getting insanely better. It's just crazy, the progress.
Well, do you think people will graduate from Lovable to a different platform? Like, because their positioning is the
good question.
Amateur amateur tool, perhaps.
That's a good question. I think small amounts of creators on Lovable will, but majority of people won't, because you're marketing to a complete new segment of people.
Yeah.
So, for example, like my wife, right? I'm encouraging her to learn coding or learn vibe coding. I would never expect her to pick up Cursor. That's just not possible. Or she's not interested, let's say that.
Did she make Family CRM for you?
She did.
Seriously?
Yeah, seriously.
Yeah. Nice.
Oh my God.
What's the use case? I'm curious, if you don't mind me asking.
Yeah, to keep Paul reminded of all the things.
All the things that Paul needs to do. Yeah, understood.
Exactly.
Okay, great.
And all the things. So instead of asking her, she reminded me, now I have a link that I just keep open on my desktop.
Nice.
Don't have her invite my wife to that thing. And we'll both be drowning in tasks.
All right?
Oh. Oh my God. Okay. Let's move on. I look at our doc here. We talked about data centers in outer space, which is like maybe the best headline in the world.
Yeah, for sure.
Should we talk about the self-driving truck stuff?
Take it away.
yeah, what's happening there?
So like this was super interesting. Let me get this up. I'll share it, Paul. So, 1 second. Here it is. So, it doesn't actually say what company, but there was this headline: CEO of self-driving truck company rejects Teamsters' demand for human operators. And I love it. And then, Fetterman here, the guy who doesn't love this guy? Like, he's the one wearing the Carhartt sweatshirt into the White House and stuff.
Yep.
He's like, I fully agree with Teamsters. Self-driving trucks should always be supervised by a qualified professional to keep our roads safe. It's a necessary partnership for America's highway and economy. And there's some really good comments here. So Sheil, who's like big account on X. I don't know if you know him, Arjun. He's an investor.
I used to sit next to him, at 500 Startups. He's
okay.
Amazing.
Yeah.
Oh, really?
Yeah.
500?
Yeah.
Okay, cool.
Yeah.
So he's like, sure, until the self-driving trucks companies can provide the DOT data that self-driving trucks are safer than human drivers, that makes sense. But as soon as we know that for sure, that self-driving is better, wouldn't it make any sense to have people saying they're doing nothing, right? So I think a lot of people picked up on this kind of sentiment that maybe the term always is a bit dramatic here. And I understand his constituency and where he's coming from, as a senator. But I was just curious to hear, but actually both of you, what you guys think about this.
Yeah, I mean, there's another use case here that we didn't really talk about, but supervised how and by whom. And, a lot of times you can be supervised by a human that's sitting in front of a screen, but is supervising 6 trucks, right? And so there's a great company out of the recent EF batch called Crewline, which is allowing people to remotely operate heavy machinery. So I think of them for this. So I think there's a lot of different ways to do that, basically.
Yeah. I think Arjun.
Paul, what do you think?
I think Arjun nailed it. It's just, the future is obviously not going to be 100% replacement. It's just going to be one person monitoring 15 trucks.
Yeah. I always thought the human intervention piece, I think it'll exist in all these things in our lifetime. I don't want to say forever, but because I just see a lot of scenarios where, okay, self-driving truck, it all works, and then there's a big snowstorm or something, and they can't totally solve it, and so they just need to flip the switch, and there's some guy in Arizona or whatever who is able as needed to get out of the snow. I find that to be more plausible with personal cars and stuff. I mean, this exists today with drones, right? Drone operators are sitting somewhere. So we know the model works. And then they have some form of automation, right? The drone.
Mm-hmm.
My understanding of a military drone for the United States, it flies from the US to the target, wherever that is. That's all automated. It just heads out there. Yeah. Once it gets there, it notifies the guy. It's hey, I'm within range, and then they
flip it on. Yep. Mm-hmm.
Yeah. Yeah, I think there's I see that let's call it model being adopted across a lot of these types of automated things. And then Paul, you hit the nail on the head, right? Does it mean one driver is driving 6 trucks? Or they're just not necessary to be in the truck doing it. Although the one thing I'll add here that isn't brought up on this discussion. So when the whole self-driving truck narrative really was popular, is about 7 or 8 years ago in the first election with Trump and Yang. And Andrew Yang was big on this. And one of the things that came out was that the driver is required to unload the truck. And that was one of the reasons they came up with why it would be very difficult to automate the trucking part, because you still need a driver to unload the truck. Where a private car and taxis and buses, there's a lot of other use cases out there where some form of automation seems to fit better with the current use cases.
Is that a regulation, or is that something around, is that one of these things that's been written in law in perpetuity? Because back in the day, you need to make sure the person responsible for the stuff is the one who's actually taking it out. So there's not, whatever, something inappropriate in the back, right?
There must be some union thing about like there must be
some
2 people,
legislation.
1 person supervising. A lot of engineering work is like this, right?
It's similar to this, right? Yeah, exactly.
Have to have
so
3 person on site.
Yeah, we'll have to do some digging on that. Yeah,
I don't know. It does
curious why
sound like
that rule exists. Yeah,
like the guys at the store can't unload it.
right.
Right.
Yeah, it's got to be the driver who unloads it or something like that. This would be. I'd be curious to dig onto the history of that regulation.
Right.
Yeah.
The real problems is always like in the integration points, right? It's the unloading into the truck and offloading into the truck, exchanges. That's where usually everything breaks down. And automation can fix.
Right.
All right, and then we got a couple more minutes here, so let's do this one. So Arjun actually picked something from your LinkedIn here.
Okay.
And this was the Anthropic OpenAI race to IPO. So I think this is a really interesting topic. I think it's very clear that at least, let's call it rumors are that, well, it's not a rumor. Anthropic has said they plan to go public at some point early next year. And they have actually put in place, like hired a legal team or investment bankers. Like that was my interpretation of it. OpenAI is more hand wavy, right? Like they seem to have kind of made this public or alluded to it, but it's not as clear. So just give us your perspective on the Anthropic OpenAI race to IPO in 2026.
Yeah, I am happy if any of them get there in 2026. That would be awesome for the industry writ large. So I think while they've both had very different trajectories on their path, I mean the growth from a revenue perspective, from all perspectives, has been absolutely astronomical and awesome to watch. I think if I put my ecosystem hat on, as long as one of them can get to an IPO moment in the calendar year 2026, that's going to be great for the broader ecosystem because there is so much liquidity locked up in both of these companies. And ideally, they're kind of clearing their past round prices, right? So rumors are OpenAI, I saw something today, $750 billion. I think there's been some rumors floating around about Anthropic at 300 plus. So as long as I think they can get out, Anthropic ideally closer to $500 billion and maybe OpenAI close to $1 trillion or even 700, 800. The amount of liquidity that releases into the ecosystem is going to be tremendous, and it's going to help 1,000 flowers bloom, right? So as people start to get that liquidity, both funds, early stage investors, late stage investors, family offices, all the people that have kind of chucked on into these rocket ships along the path are going to see some liquidity. And that liquidity will then kind of return into the broader ecosystem. And so that means more funds getting funded, more startups getting funded, more, just general energy and excitement out in the ecosystem. Employees who now have liquidity and we've seen this with every other cycle, they're going to put their money in things they know best. And those things are startups. And so that's going to be good for the broader ecosystem. So I'm just hopeful one of them gets there and also, put in that bucket SpaceX or Stripe or anybody else who might swing it or big enough that they'll unleash such a tidal wave of liquidity that it'll have great downstream effects for the rest of the industry. So that's what I'm excited about. So a little bit of a different take on that question, but I think I'm happy for either to go public. Let's go.
I'm excited to see the cursor mafia or the OpenAI mafia.
Yeah, indeed. Yeah, exactly. Yeah, what are those guys going to do? It's going to be awesome. We were talking about the PayPal mafia earlier, so yeah, let's see what happens with this cruise.
Yeah, I mean, I think there's a lot of people I meet who maybe don't understand that component to the startup ecosystem. That when these companies, like when the big ones go IPO, Figma is a good example. A lot of the money that goes back into startups comes from those IPOs. So the investors, obviously, a lot of venture funds, they completely you would even know more than I do. I believe there's a lot of funds that have bylines and rules about this, where when the company goes public, they have to sell and they take that money to put into private companies and private startups. And not everyone does this. And there's actually lots of if you dive into this, some funds like Sequoia are creating these public funds. So it's a whole discussion in the VC world. But I do know that there's a group of investors where we focus on early stage companies or mid stage in the startup world, and when they go public is when we cash out and we take that money and put it back into other startups.
Indeed. Yep, that's the way it goes. Keeps it moving.
Paul, any other news you want to talk about?
No, I think we covered all the big and exciting news this week.
All the exciting stuff. Okay, I
All
got
the exciting stuff.
one meme to close us out with. We
Nice.
always do a meme of the week, and this is my new
Oh, I know
favorite.
what's coming up.
My new favorite meme template. I've been doing these for a couple months now. They're starting to catch on. So this is the. I said, pitch decks don't create demand, and the group I was with at Dolores Park asked me to leave their blanket. I had to go get ice cream at Byright all alone. It's total inside baseball. I've been doing all of these, like, kicked me out of SF, kicked me out of SF memes. And it's some of the DMs I get are like super
so
funny.
Niche. I love this, how niche this is. It's great.
I know sometimes the more inside, the better. Like there's only like 5 people that like fully get this joke. It's my favorite. Anyway,
Amazing.
did you have fun today, Arjun?
Yeah, this was a blast as always. Thank you both. This was fun.
Thanks for being on the show.
Yeah, of course. Thanks, y'all.
Land here.
Awesome.